Okay, Andrew, short market positions. If you're short, tend to get a lot of buzz. Just look at the film The Big Short for Hollywood's take. But according to a new report, turns out the actual practice of shorting may not be as popular as it once was. Leslie Pickard joins us now with more. Leslie.
Hey, Joe, that's right. Shorting individual names is becoming less and less common these days. Only about 1.7% of the S&P 500 market cap is held short, according to data by Goldman Sachs. That's the lowest level in 13 years since the pre-crisis era of 2006. Now, you'd think it'd be the opposite, right? With the stock market at near record or record levels each day, it seems like the opportunity to ride any kind of market reset to the downside would be palpable. But instead, as one large equity long-short manager texted me recently, shorting is so freaking tough. And because the market keeps going up, investors are increasingly abandoning individual short positions. This environment has also put many short-biased funds out of business. And for those managers who historically shorted individual names to hedge, many are turning increasingly to ETFs to accomplish the same thing with arguably less risk. Now, one area with plenty of interest in short interest, recent IPOs. Lyft has the highest with 70% of its float out on loan to be shorted. Beyond Meat is around 40%, while Uber and Zoom are in the teens. Pinterest has just about 9% of its shares on loan to be shorted, guys.
Well, Leslie, you tweeted something out yesterday that I thought was really fascinating. The top 10 holdings of the hedge fund community and the top 10 shorts.
Yep.
And it's a lot of names you might anticipate and might expect.
Interestingly, a lot of the FANGs are among the top
10 holdings, right?
You've got Amazon up there, you've got Facebook, Microsoft, all of the big suspects, which a lot of people criticize as saying, well, if their top holding is Amazon, where are they really driving?
Right. Where's the alpha that's different from what the rest of the market is getting? Right?
Exactly. And part of that has to do with the fact that for a really long time, hedge funds were trying their best to avoid these big FANG names, but they were missing out on...
You can't fight the market. You can't fight the tape at some point.
Exactly.
You got to hold on to it. But that made me think the same thing is why are you paying 2 and 20 or whatever it is you are to the hedge fund community?
Absolutely.
If these are the top holdings that they've got.
Right.
Top shorts are some of the names that you just mentioned, though. So.
Yeah, and one of the names that Andrew mentioned. And this is on an absolute value basis, so it's not percentage of shares that are held short relative to float, but on an absolute dollar basis, Qualcomm, top of the list, which I thought was really interesting. But it could be partly due to some of the concerns surrounding, the risk, the regulatory risk that they're undergoing, maybe some of the M&A concerns that have been, brought up recently.
Right. Now, those shares, by the way, right now down by more than 12%.
Yeah. So that's a win for short sellers in that stock today.
Drag out the old recording. I mean, we have talked about Qualcomm a lot lately. I mean, not quite to the extent in the past, but almost time. Almost time for the old Qualcomm.